The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi, folks. This is Larry Pesavento for TFNN. If you have any questions, 877-927-6648. The main thing that I'm watching today is the gold market, but I wanted to start the show with the natural gas futures because last week when we were on the show, we were making a really nice Gartley pattern down at the 312 level, and we've since rallied up to the 618 and 786 at the 352 level. That's 40 cents in natural gas, which is quite a bit. And now what we have is we have two lower tops. So this is basically in a downtrend. So this is a spot where almost all commodities are going down. This one is still in a short-term downtrend since November, and it's offering a relatively low-risk entry around this level. So that's something that we want to keep in mind. One other thing, someone from my past, very famous, that I remember, the man who who designed the Edsel, Roy Brown. He's 96 years old, passed away yesterday, and many folks have never even seen an Edsel. But boy, believe me, when they come up for auction at the Barrett-Jackson auction in Scottsdale every January, those cars go, for a very, 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 very high premium. So put the little white light out for his family. 96 is certainly a wonderful long life, and that is something that, I'm sure his family is very proud of. When we started the show, actually it was before Basil came on, I posted a chart for the Dow Jones Industrial Average. It was an hourly chart. I'm going to repost it again because we still have the same pattern forming, and it is really one of the best bearish patterns that you could possibly get. I mean, I don't know how much farther this is going to go, but we're having so much divergence in the market. It's really going to be interesting what happens here. But we have a 5-point reverse point wave. In other words, these waves are going up, making a new high, then coming down, making a new low, and then coming up and making a new high. But it's only doing it with the Dow Jones Industrial Average. The NASDAQ, the S&P, and the Russell, which has been the leader of the whole thing, is now making lower tops on the hourly chart from 4 days ago. So there's a whole lot of divergence that is happening here. So it's just several of the Dow stocks, and because they are price-weighted, a stock like IBM, can make the the index hold up, quite a bit. So that's what I'm seeing in the stock market. Whether it's going to turn today or possibly tomorrow. This is the last day of the month, so there's a lot of things that can happen. Just because of what the mutual funds and hedge funds can do. To show positions at the end of the time. We'll have to wait and see. But right now, it's setting up like that's really. Really a bearish pattern. Now I want to switch over to the gold market here because last week we were, in fact, just a few days ago, we were talking about the gold market and the fact that we were looking for a test to come in around the 1580 level, and that's what we've done right now is we've already broken through the 61% retracement. We had a beautiful pattern there at 1580, and I think the thing that's really nice is that, these markets, especially gold, I mean, I know you folks like to trade the stock indices, but if you would look at the gold market and also the crude oil market for their patterns, because they're much purer to trade. I mean, you don't have these little gyrations that you get in the reports many times, and they follow the numbers. Like last night, we had the first rally that we had in gold after it made it 1620 only came to a 382 retracement at 1602. That was 0.382. Then the market broke down about $20. And then early this morning, it rallied up to exactly 61% of retracement of that 1602 high at 1596, and promptly dropped, $20 an ounce. And I was looking for it to come into around 1579, and so we were able to get short in that 1595 area and made a nice move of around 1400. And then we gave $150 back at the 1579.50 level, because the market, this gold market, is so accurate that you don't have to risk more than a couple dollars in it. And when you stop and think that the contract size is $157,000, that's really amazing. Back in 1980 and 79, when I was at trading gold at Drexel, the margin on gold was about $15,000 or $20,000 a contract, and gold was trading around 600 to 800. Well, actually, the move between 600 and 800, took place in about 4.5 weeks, and then it went from 800 to 400 in the next, I think 3 or 4 months, and then rallied up to 700, and then went down to 280, way down in the 2002 area when Tom became very, very bullish on the gold. So this is an important test that we're having here in gold now. Basil mentioned the 1567 level in gold, because if we don't hold the 1567, which is the 786, that means that we're breaking down even farther. And so this is a really, really important test that we're having now in the gold market. We also are having the same situation happening in the silver market. We are very close to that long-term price in silver that we've been watching on the daily price. We've just made the 61%, the 786 retracement of a low from 28. Whether we hold this or not remains to be seen. But on the shorter term basis, there is a little bit of support coming in at around 28.50 in the silver. But frankly, I think that there's a really good chance that because the market is so weak today, that we are most probably going to go down another dollar to the 27.50 level. That's going to be a really key support, because if we break 27.50 in silver, we're about $1 an ounce away, which is not very much in the silver market. Boy, that tells us that we are, really in, really a deflationary scenario. I mean, we've been saying this for a long time, that we've had these lower tops, all along, and we'll see. But I just wanted to bring this out because it's both gold and silver are reaching very, very critical levels. And now I want to show you one that is, if you want to see a terminally ill patient, the next one I'm going to show you is certainly meets that category by any stretch of the imagination, and that is the copper market. I mean, when you stop and think that we have had such a rally in stocks, since November, and the copper has virtually done nothing, and realize that copper is in almost everything that that has any communication or electrical current going through it, and this is really not indicative of a market that has a lot of consumers out there that are ready to buy, because they're not building that many products with copper in it the way that the price of copper is working, folks. And copper is a very large market. I mean, that's a huge market, and price determines what we're looking at. But we've had a really strong up and down move in stocks, which really they've gone nowhere. And copper has had a 3-day rally totaling of about 7 cents, which is virtually nothing. So copper is acting incredibly bearish, and if we ever get it below $3.40 a pound, which is 15 cents lower than where it is now, it could easily test the $3 a pound level that was in September of 2011. So, it's just acting very, very poorly. So it's really hard to be bullish on copper at this time, and given the fact that it has such a high correlation with stocks ordinarily, you would think that this would really be a market that would be moving, very, very, rapidly. What I'm going to do is just to Oh dear, I've got some really bad data in here on the S&P. I'm going to have to, well, Melanie, what I'm trying to do is I'm trying to show you the, let me just to see if I can, I've got to change I was trying to put up the S&P to show you the relationship with the, oh dear, just a second. There, just give me 1 second here. I have to go to walk and chew gum. This is the hard part about doing a radio show, is trying to walk and chew gum at the same time. I'm going to put in the Dow Jones, and we'll be able to, I get such bad. Let me show you the frustration that I have. You wonder why I'm frustrated? This is what I put up, and you can see all the bad data that's in the e-signal coming through. I mean, I pay money for good data, and I get this kind of baloney. I mean, it's not fair, because that red line is the diamonds, and it certainly should be, better data than this, and it's very, very frustrating. I have no way of correcting it at this particular time, so there's nothing else that I could do. There's one possible thing that I could do, and let me see if I can do that. I'll put in the futures, because maybe the futures will allow me to show you what the difference is. I'll put in the S&P futures, and that might make it show you what's happening. That's much better. Okay, now I'm putting in the chart for copper, and it's going to have the S&P futures overlaid on top of the copper chart, and there's usually a very high correlation, and as you can see, the correlation has virtually dissipated. And if you want to see a similar situation, just go back on that chart and go. Fact is, what I'm going to do is, this is so interesting, I'm just going to put it in here and show you the same type of divergence that we had back in May and June of 2011. I'll put it into the Tiger TV, and you'll see a big sort of a pinkish circle there that shows the divergence that was there at that time. This time the divergence is so much worse that it is really, really amazing. The other alternative is that this could be a great buying opportunity in copper. And if it is, it'll give us a chance, because, it's been going down with the rest of the stock market going up. So I would have to see further confirmation that these lower tops have, finally stopped happening. And we've had some lower bottoms here, which is also, a positive, but there's been no correlation for the last 4.5 months in the copper market versus the stock market. So that's a very, very negative divergence, in my opinion. And also, we're seeing for the first time, that the IWM has, the Russell has started to show lower tops. And also, when we come back from the break, we got to take a break now. We're going to do bonds and notes when we come back, because Basil covered it really well. I just wanted to add to it. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and before we get to the Treasury bonds, we'll probably cover that at the second half. We got a call from our friend John in Philadelphia. Are you there, John?
Hey, Larry, how are you?
I'm good, thank you. How are you?
Good, thank you. Larry, I wanted to ask if you'd pull up the live cattle chart. We looked at this before. My question to you on the weekly, and I'm looking at the weekly continuation, so I get 2 years worth of time. And I want to ask you directly the question, is that weekly chart a three drives to a top pattern?
Actually, John, I'll put that in and take a look at it, but I don't think that it is, and the reason why is we don't have any symmetry between the tops. I mean, it's real, and the rule on three drives is this is my rule, and that is basically if you have to force it, it probably isn't three drives. Now there are three drives there. There's no question about that. You can see the three drives very easily. There was one in February of 12, and then in September of 12, and then another one that just happened in December of 12. But they should be. You should be able to see them as a really nice three peaks and a lot of symmetry. That's the thing that I'm looking for. Like what I posted in today for the 60-minute Dow Jones. That's a really nice symmetry. The high between each high is equal, but that's a three-drive pattern, but it's not very symmetrical, so I don't like it. What I would do is on the weekly, on this particular one, if you wanted a pattern to really hang your hat on, and I'll put that one into Tiger TV, is the butterfly pattern. Of course, this is the one that you were pointing out to everyone, back in December when we were up at 138. Rich Anderson was on, and this was the aftermath of the drought, and you have a huge break. You had a 12-cent break in cattle. That's $5,000. That's a great deal of money.
Larry, thanks for posting that chart. I will just draw your attention. I'm using a different data source, and I posted a 4-year weekly bar chart in the Tiger's Den for you and your listeners. And what I wanted to just observe and share this with you is that on that chart, that continuation
chart, that is a three-drive pattern. John, you nailed that. That's the nearest continuation chart. What I'm doing is the April chart. But if you look at that continuation, folks, get in there and look at this, because if you want to see a symmetrical three-drive pattern, this is it. From top to top is almost perfect. The expansions are either 1.618 or 1.27. You're absolutely right, John. That's exactly what it was.
And I will just share a second observation. When one looks at cattle futures, one sees a phenomenon where the current spot price and then the next, say, let's just take April futures today, and then there are June, and then there are August, and one will see great variations in price, and that's all on account of whether there's a bunch of cattle on feedlots or not, and seasonal factors and all that jazz. And trading individual spot months can sometimes get cloudy, I have found. But what I will share is that December peak at 134 on the continuation charts, and then a low, I think it was 124 just 3 or 4 weeks ago. The current spot price of the nearest traded futures is now April. It's at 130. On that weekly continuation chart, that's right at a fib 618 resistance mark. I'll just let you know I put out a short just 20 minutes ago on that for what it's worth.
Well, thank you very much, John, and I certainly appreciate all the work that you do, and I know everybody else in the den does, because you are a pro, and I've watched your posts each time I'm in there, and, boy, you really do a great job, at looking at these things. So I thank you very much for coming in for the call today, and also for being in the den all the time. It's a big help to all of us.
Larry, thanks for your input. I do appreciate it, sir.
All right, my friend. Oh, by the way, John, we're going to be spending more time in Philadelphia. We've got a new arrival coming on August the 19th. So we're going to have a new baby in the family, which will be fun. I'll have to spend a little more time in Philadelphia, which is fun anyway.
That's okay, folks. Number 2. Terrific. Congratulations.
Yeah. Okay, thank you. Okay, I think we're going to be coming to a break right now. Then I want to cover the Treasury bonds. I'll post the Treasury bonds, into the Tiger Den, and then when we get back from the break, we want to talk about, Treasury bonds, because Basil talked about it on his show, and the fact that, the bonds have not backed off very much. Since that 61% retracement was made back at 142.06, we had a 4-point rally up into that 162.09, which was an exact 61% retracement of that high we made in January. But with this big move,
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I posted into Tiger TV the long-term weekly bond chart and showed the really strong support that we had at the 142 level, and we've rallied about 4 points. But the next chart that I want to show you is a way of looking at the comparison between the Treasury notes and the Treasury bonds. These markets are so much larger than the stock markets that it's really quite amazing. Now, we did hit the 61% retracement on the Treasury notes. That was off of the November high. But on the Treasury bonds, we were only able to make a 38% retracement of that. So the notes are much stronger. Now, remember, the notes are shorter term. That is usually a sign that, scared money moving. That's what it usually means, but, not necessarily all the time. The important thing that I'm seeing as a technician is we've gone up to the 61% retracement 3 days ago. We hit it again yesterday, and the market is actually, still going up today, given the fact that the stock market, is really strong. It didn't give any of its gains back. I mean, it's held everything. All we need to do is to have the notes get above 133. And they could very easily make, new highs above the 135 level. That would be equivalent to about the 149 to 150 level in the 30-year bond. But the Treasury notes are leading the market. You can see that they have, taken out the January highs by quite a bit. And so it's telling you that some people are still interested in low rates. I mean, I don't know why anybody would buy a 10-year loan anybody anything for 1.8% for 10 years, especially a government that has no spending controls at all. But that's just a function of the markets and how they operate. I wish you could go back into history. I know I've chatted with Basil about this and also Tom about what was happening in 1980 and 81 after Carter was out of office, and we had the Iranian hostages and stuff, and we had interest rates at 14-15%. I mean, this is such a different environment that we have now, that people want debt at any price, and they really don't look for what we call security in it anymore. I understand that the J.C. Penney bonds are really getting hammered today, being downgraded and everything because their earnings are so bad. I remember one other situation when I was in graduate school. There was two very large retailers. One was Sears Roebuck, and the other one was Montgomery Ward. And a man named Sewell Avery, who had been a general in the Army, was running Montgomery Ward, and he decided, to stay in the cities, and Sears Roebuck decided to move to the suburbs, and that was the end of Montgomery Ward. I don't even know if they're still in business anymore or not, but they were equal at one time. That was back in the late 50s and early 60s. So these, when you get an executive in there that doesn't, see the future like he should, that's when you have these big turnarounds. Another one, of course, was Eastman Kodak, Polaroid. I mean, you could just go one after another. And many people don't even know this, but American Telephone, which, telephones are, one of the most important things in the world, it has filed bankruptcy twice during the Depression. So, even though it was a great invention and we all use it all the time, it still was not handled, as properly as it probably could have been. So we'll see. Someone asked me a question, is that going to happen to Apple? Hey, no, I don't go into that. All I still believe is that Apple still has that price target of under $400 a share. I have to stick with that unless it gets above $490 a share, and then I'll cry uncle and say nope, it's not going to make the $400 a share. But that's not a commodity, and this is a commodity show. So anyway, we're watching these notes and bonds are holding up relatively well, given to the fact that the market is still in a really strong rally mode, at least rallying back to where it was, earlier this morning. So we'll find out more about that, as we go through the day. Now, I wanted to talk a little bit here about, since we're talking about inflation a lot, and I wanted to mention, what happened. We've been watching gasoline futures, and the fact that we had that, really strong resistance up there at the 307 level, and it went up to 316 on a spike day with some kind of news, and then it had a pretty good break and one more rally, and then it's broken down, and it's almost hit the exact 786 today. It was very, very close to the exact price, but it's having one of those Roman candle days that Basil talked about. So this could be the bottom in the gasoline futures here, because we've had higher bottoms, since November. And if you looked at the long term, I believe I might have miscalculated that. Let me see. I'll put in the 61%. No, I did miss it by about a penny or two. I was correct on that. But I was looking for it to come in around 280, and it came in at 282 per gallon. So we missed that a little bit. But the fact that it's having this Roman candle type day, and a Roman candle type day is when you have the low made early in the morning, and then the market, rallies very, very strongly, and that's an important technical picture when you're looking at it. And Basil does a really good job with the candlesticks, and it really helps to tell you where the support and resistance is in some of these things. And so that's why I think it's important that we keep that in mind. Someone asked me a question, why would somebody go into the 30-year bond, versus the the notes, and that's just a matter of interest rates. I mean, you're talking about 1.8% on the 10-year, and the 30-year is trading at around 3%. So people will pay, or will take that 1.2% and take the risk for 30 years. And that's a function of being just foolish, in my opinion, because, there's nobody that I would lend money to for 30 years at 3%. I mean, there's nobody. My kids, I'd give them the money, but I wouldn't lend them the money. I mean, but that's a bad investment on anybody's part. You just stop and think about that. What the ramifications of that are, what they could be, and then I think you get an idea of where I think these interest rates are going to go. Because when they do finally spike, and they will, the interest rates will start to go up. Then you'll be looking at something a whole lot more sinister than what we've seen so far. Now, I wanted to take a little bit of time here to talk about crude oil, because we're having a situation now where we're having higher bottoms come in, and this is a potentially a positive sign in crude oil. We've had this is our third higher bottom. Actually, yeah, it's our third higher bottom, completing what we call the 135 pattern, and so far, oil has rallied just a little bit, but since 4 days ago, we've had three higher bottoms, and that's a positive sign, from a technician's point of view, because it tells you that you have more people willing to come in and trying to purchase crude oil, for a pretty good bounce, because we've had a big sell-off, in the crude. We had the very large ABCD pattern that we looked at, that the Gartley came in at $98 a barrel, and then we were looking for this pullback to occur to around 90. I still think we could still make 90, which is the 61% retracement, but we could get a nice $3 or $4 bounce up into the $95 per barrel level just on this little bounce. And that's another market that trades absolutely beautiful with technical patterns and the ratios that we look at. Crude oil, bonds, the euro, the British pound, those are the ones that really are easy to trade. You don't have any of the wild gyrations that you get with some of the other things that we see in the markets. Now, the next one that I wanted to cover here is something that we've been watching for quite some time, and that is the corn market. We were looking at corn at around the $7 level, and it didn't hold that level, and it went down and has made a double bottom. And now we've taken out the highs of January. We did that with a small butterfly pattern on the hourly chart that took well over 2 weeks to finish up. And so if you get a pullback in the corn, I would certainly be watching that for a potential of a move to the upside. And also the wheat market is having a little bit of a rally. Beans have held up better than anything else in the whole complex. By the way, I was trying to get Rich Anderson on the show today to talk about some of the grain things, because the lower Mississippi, the Coast Guard has closed the lower Mississippi River to barge traffic, and that means a lot of getting grain shipments and stuff that are still there out to the the freighters to send them around the world. So that'll probably one of the reasons why we might be getting a rally back in here. But we've taken out the highs of the previous month in corn, and so that could be very interesting. Now there'll be a big difference between the new crop corn, which is the December corn, and then the crops that we're looking. I'm looking at the March and the July and September corns. Those are the ones that I'm following right now, because they have the more liquidity and they have more. Because I look to trade these things. I'm not trying to make a prediction. It's going to go for a long way or anything, but all I'm saying is that it has a really strong probability of having a pretty good rally after making a double bottom, because we've been in a really strong bear market in corn. I'll be able to I'll put this in here what we did last week, because we were looking at corn at the 675 level, and it rallied up to the 786. And what's happened now is we've come down and we've made a double bottom almost at the 61% retracement. And that's still $1 a bushel, higher than when we started in June of last year when the drought started. And believe me, boy, if you really want to see a market that could really explode, if we would get a drought situation again, back-to-back years, we haven't had that since the 30s, the Dust Bowl years, but remember back in the 30s they didn't have the irrigation programs and the soil conservation that we have now. So this is something that we have to keep in mind to look at it. But right now I think corn has made some type of a bottom in here, and I'll be watching it over the next few shows, to see if we can get a pullback, to see if it's going to rally. I don't like to risk very much on these things. If I'm wrong, you just stand aside and go to the next one, because these numbers they hit so beautifully that it's just not worth it, to really work too badly. Someone asked me about the gold, because we talked about that this morning. That was one of the things, and we've had a little bit of a rally of about $7 or $8, but it came right into that area that we were watching. The longer term 61% retracement on this gold came in at 579. We went down to 575, and so all we're looking at now is this is just really a dead cat bounce in gold. There's really not much to do. Now, if you were interested in buying gold, and frankly, I think this 1555 level that we hit back on February 20th is a very important number. What you could do is you could look to buy, a little retracement on that. Now, remember also that we posted the silver this morning, and silver did not make a lower low, as I recall. Let me double check, because I had my beeper on the silver at the same time that I had the position on the gold. Yes, and that I posted this once before, and you'll see that the silver held the 786 level on the 60-minute chart, whereas gold went a little bit below it. So we've completed an ABCD pattern. We're having a little bit of a bounce in silver, but frankly, not very much. I checked the open interest figures in the gold and silver, and really there's no help there as far as saying that there's a big bull market, coming in these things. Believe me, that doesn't show that in any of the commodities that I'm following. So I would be extremely careful to be watching any of those things, to see what's really going to really happen to any of these things. So the commodities they just look very, 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 very bad. That's the only thing that I can mention. The U.S. dollar has held up extremely well. It is doing stayed up in near this 182 82 level for quite a while now, and we are within a heartbeat of the exact 82 level, and that is the number where we have a very important pattern coming in, and we'll cover that when we get back from the break.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're going to end the show talking about the U.S. dollar. You can see from the chart that I posted into Tiger TV that we are right at within just a few ticks away from the 82 level, which makes a bearish Gartley pattern in the dollar, which means the pound and the euro and the yen should be ready to change. But you don't really know. There are three major currencies in the world: there's the U.S. dollar, the euro, and the yen. Then you have the pound and the Australian dollar and some of the others. But when you look at the overall pictures of these things, they give you a very, very cloudy picture because the dollar has been holding up incredibly well, given everything that has occurred. And then when you take a look at the longer-term chart going back 4 years in the Japanese yen, after we came off of that bottom at 75, we've almost made a 78% retracement off of the high from 2009, and we're right in the middle of the cycle right now. And if you'll take a chance to take a look at this, you'll notice that every time this 48-week cycle peaks in the middle of the cycle, which we're right there right now, you have a pretty good correction in the yen, and we've had a tremendous move here, since September, a move of, well over 17 points, which is, a very, very large amount. So we would be looking for a pullback in this move. So there should be resistance at around 93.30 in the market for the yen. Now, I want to end the show with a big caveat here, because I know the stock market is strong. It looks strong. But folks, we're making a 5-wave reverse pattern on the Dow Jones. We're also doing it potentially in the S&P, and we have a lot of divergence everywhere. So I know if you want to go long here, wait a day or two. Remember, this is the end of the month, so a lot of things can happen just because of the end of the month, and people have to put orders in to verify, to have so much in the market at a certain time at the end of the month. And it can be very squirrely the last day of the month. It's almost like options expiration. So just keep in mind. But that pattern that I posted from the very beginning is still valid. And we could make 14,200 in the Dow, and it won't make any difference. It's just that type of pattern. And when it finally does, it'll have days like we had the other day where the Dow dropped 150 points, in a matter of an hour or so. So. Just because you have these wild swings up and down, that is not a bullish thing. Just stop and think how a bottom is made. It does the same thing. It goes down and jabs, and it goes up, and then comes down and jabs again. And that's how you come up with these 3 drive patterns and these little butterfly patterns and expanding triangle patterns that we look at. And so, but we're getting so much divergence across the markets, and also in the VIX index too. There's virtually nobody out there that is least fearful. Even on the big down day, people were, and they were right because the market came back the next day. But the fact that they were right that one day doesn't make it right for the next. It's overall, it's very cautious in my opinion. So that you should be, cautious with your 401ks and your retirement accounts because, that long-term New York Stock Exchange Index is got a major divergence. It never went above the 786 retracement of the 2007 high. We were able to match that high with the Dow Jones and almost in the S&P, but we certainly have not been able to do that with the overall broadest index, which is the New York Stock Exchange Index. So, keep in mind that those things are, very, very important. If you're looking at these charts the way that we do, and that gives you a pretty good idea of, what we're watching. And, I think I'm going to put this last chart of the New York Stock Exchange in there. Live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.